Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by managing director and Washington research analyst Jeannette Lowe to talk all things politics and policy. Jeannette, how are you doing today?
I'm doing well, Ross. How are you?
I'm doing really well. Thank you for asking. Obviously, a lot to talk about. We're kind of in the middle of a presidential election year here. I want to focus first on something that you all have been talking about and mentioning, which is that election years tend to actually be pretty good for the stock market. And the primary reason for that is all of the levers that the administration in power can pull on to juice the economy and markets and liquidity and all of those things. So I want to talk about that, but also you've mentioned how that can lead to a hangover in 2025, and I want to get your thoughts there as well. So I'll turn it over to you to get thoughts on that topic.
Absolutely. So what we've seen is that the S&P 500 has not been down in the past 13 presidential reelection years, and it's actually been up by an average of 15.8%. And as you mentioned, the reason why is that we have a president running for reelection. And when we have a president running for reelection, they are trying to juice the economy, keep the economy supported so that they can actually win reelection. And so Biden obviously is kind of dealing with a little bit of a hangover now, just because we had so much fiscal stimulus for the US consumer during the pandemic over the past couple of years, and that is starting to wear off. But he does still have some tools in his toolbox that he can still employ to try to keep the boost under the consumer. So one of those things is that he has been forgiving small tranches of student loans. He is going to provide a student loan payment cut on July 1st, cutting in half how much student borrowers have to pay for their existing loans. He's been trying to keep oil production high so that he can keep gas prices low, especially ahead of the summer driving season. He is looking at putting into place a modest but a housing policy that allows Freddie Mac to actually guarantee second mortgages, but this would be just more home equity mortgages. So homeowners don't actually have to give up their first original low mortgage to pull out that home equity to maybe pay off credit cards, to maybe make some home improvements. So he's doing a number of things along those lines. So they're smaller than the kind of stimulus that we saw during the pandemic, but there are various tools that the administration is using to try to keep the US economy percolating ahead of the election. But all that means is that when we get to 2025, there is going to probably be this hangover effect. And so that you're now looking at a worse US fiscal situation. Because we still have high interest rates, we have higher net interest costs for the government to pay. And that higher spending is actually eating up, even if we're seeing higher tax revenues come in, those higher spending costs, particularly for net interest, are actually starting to eat up more of the budget. And that is going to ultimately lead to this hangover effect once we get into 2025. It's really difficult to have fiscal austerity ahead of the election, but once you get past the election, whoever is president is going to have to deal with those circumstances.
Yeah, absolutely. Definitely setting up for a big, important, and potentially volatile 2025, regardless of who wins the election in November. Leading up to the election, however, I know you all have a handful of indicators and metrics you like to look at. We just talked about how it's important to have a strong economy leading up to an election and particularly a re-election. What do you all watch closely? What are some key indicators that people can keep an eye on in the economy or elsewhere to have a better sense of things as we head towards November?
Right. So there's three main things that we look at. So first of all is the president's approval rating. So if a president is running for re-election, the election is either going to be a referendum on their first term in office, or the president needs to make the election into a choice between him or the other candidate and let voters decide which one they would prefer. Right now, the other thing that kind of feeds into approval rating is also real per capita disposable income. And so that's one of the things why the president is looking to try to stimulate that component through gas prices, through housing costs, through student loan payments, all of those sorts of things, because that can then help his overall approval rating. Second is the misery index. And so we have found that the misery index has been a very good predictor of election results. It's predicted 15 of the last 16 elections. And what happens is this is the unemployment rate and the inflation rate combined. And if that rate, a 3-month average, is lower in October from the year prior, then the president usually goes on to win re-election. But if it is higher, then the president would go on to lose re-election. So that's the second indicator that we really watch. And the third is swing state polling. So we do know that there are a lot of states in the United States in this electoral college system that are going to typically vote for one party or another. But this cycle, there are at least seven swing states, what we're calling the Magnificent Seven swing states. And those are where you're really going to see the election decided. So we watch in particular, what are the polling numbers? What is the direction in the polling in those key swing states? And that's one of the other election indicators that we watch to see what is the trajectory of the election going forward and who might be more likely to win come November.
I love it. You have your own Magnificent Seven. That's some good marketing by you all. Well, the good news is we'll have plenty of time to read and listen to you all as we lead up to the election and get those insights that you're discussing and key reads on those indicators. So, Jeannette, thank you so much for the time today, and we'll definitely look forward to talking again soon ahead of November.
Awesome. Thank you so much.